Welcome to Java. Thank you kindly for joining. It is October 27th, 2024, and it is also Sunday. So I hope everyone is having a wonderful weekend and we can look forward to some very interesting things going on in the market this week. It's going to be an extremely busy week ahead. So let's get started with the markets. The MMRI is our favorite risk indicator and it is increasing at the moment. It is 274.9. So not having any jolts, but it is increasing in this risk factor. Now, with this, at the same time, we've got the fear greed meter has retraced a bit. So this is actually a good sign. We've got less retailers coming into the space, gambling, if you will, in the sector. Now, with this, we've got the 10-year yield rising as well as the dollar. Now, the dollar is really the spike here that is sending the MMRI higher at the moment. Now, there is a divergence here, and basically it's showing a sell-off in the bond market. The debt market, as I said, is larger than the stock market. So that bond yield, 10-year, selling off at a rapid pace and showing a spike in yields. When you see this number go up too rapidly, that is a very bad signal. So we'll keep an eye on that. But you can just watch the numbers for the MMRI. I've got a link in the description if you would like to see. So the sentiment for this coming week, bond yields still very volatile. So we will keep an eye on that. We've got major earnings coming out from several mega cap companies, notably Microsoft, Apple, Visa, Meta, Tesla, Coca-Cola, Amazon, MasterCard, Apple, and ExxonMobil. So those are some of the major ones set for this week. So those could have a definite effect. They're all the larger caps. So with this, we've also got these major earnings, the pending elections. Right now, the market has Trump priced in for the win. Now, that doesn't mean that's what has to happen, but that means that if that does not happen, there could be a major shakeup in the markets, not just the stock markets, the debt markets, and cryptocurrencies as well. Regular currencies also that trade on the US dollar will all be affected if they get a shock. So we'll see what happens going forward. So with these, the safe place, so to speak, that it will run to generally is gold and silver, some cryptocurrencies sometimes, and possibly oil, but oil is being manipulated because of the Middle East. So we're watching some moves with that. With this, we've also got real estate is very regional. Now, many sectors, the real estate sector is weakening, and I'm speaking mostly about residential at this moment, but commercial is also has taken a hit. The residential, particularly in the disaster hit areas, if you will, definitely dropping. We've got Florida down, areas of Texas, and other areas in the southeast that are dropping rapidly, but it's not limited to those areas. We'll watch those because market rates actually increased. So even though they cut rates, market rates increased. This is because a lot of the lending sectors. Now, going forward, we've got what they're calling the bond trading frenzy, risks giving the market makers false sense of security. So we spoke about this, the debt market being larger. If the volatility strikes, you will see a rapid increase in this number. Right now, 4.246. So that is basically your signal. We've got the Fed going quiet ahead of November 7th meeting. Now, that is 2 days after the election. So, of course, they're going to be quiet about this. They're just taking backstage to all of the drama going on with the United States election cycle. So, what's expected right now is quarter point cut is what's likely. Don't know that they want to shock the markets after that, but we'll see what happens 2 days prior. So, with this, they're finally picking up and putting out that the markets are moving in mysterious ways, and Wall Street is struggling to explain why. Well, the reason is because they are tying together the market, meaning the stock market, with the real market, real economy. And those are very divergent. We are in a recession at the moment, at the best, stagflation. So, with all of these and heavy inflation, it's going to increase the price of everything along with the currency manipulation. So, these things will push stocks higher. At the same time, Main Street basically struggling. We've got increasing joblessness. Despite the numbers, they always revise those. So, large dichotomy. This is a calendar of the earnings. Got a lot of large ones happening this week, so we'll bring these up during the week. We've got consumers. This is the story of the real economy. Consumers reaching the breaking point, and they're forcing retailers to shutter their stores at a worrying pace. Basically, businesses going out, filing bankruptcy, merging, or selling off. Fastest pace in quite some time. This is not the sign of a strong economy. At the same time, this is the divergence. The last time the markets, meaning stock markets, were this good was 20 years ago. Can we keep up? So think about that. 20 years ago would put us right at 2004. What happened 2007, 2008? Largest crash in quite some time. That was the great pain that basically got rolled forward. So with this, we've got charting the global economy. The IMF is lowering global growth forecast. So telling the truth here, the global growth is down, manufacturing down in Europe, in China, in the United States, and I'll speak more about this in a moment. But the ECB, European Central Bank, they're saying now they must stay nimble on their rates and looking at more rate cuts as well because of the weak economy. Now, for them, the largest drag generally is Germany, and I'll speak about them more in a minute. Now, with the United States, we've got large, massive, massive debt. So we're talking about this article basically from Zero Hedge, $6.8 trillion economy, the third largest economy in the world. Now, we'll keep that in mind for a bit. Government spending is up 50% the past 10 years alone. Economy 9% annualized this decade, faster than India or China, all funded by debt. So if they do not print, if they do not increase the debt, the GDP for the United States is doomed. Now, we are getting these numbers, and right now the largest portion of it is driven by defense, meaning the wars. So going into that a little bit more, we've got President Putin holding a private meeting with the chief of the United Nations. Now, the Secretary General did go to Kazan for the BRICS summit. They had closed door meetings. Now, this guy didn't like it, so now he's blocking the UN chief's visit to Ukraine, and he's basically very angry about it. Doesn't like that he's not in control of this and wants more funding for this continuation. So just to put the players on the table. So with this, Medvedev from Russia, of course, is promising quote unquote fireworks at a German military factory in Ukraine. Now, this is Rheinmetall, is a German group. They just confirmed the launch of the first production facility. Now, the United States has basically outsourced some of this weapon manufacturing to keep the German economy going, because if they do not, it basically will drop precipitously and that will hit the euro, the whole eurozone. So with the West and a little bit of the dumps, that's one way that they're trying to bolster, spread bolstering an economy that is funded by war. Now, remember, I just said the United States was the third largest economy. The IMF, International Monetary Fund, has just upgraded Russia to the world's fourth largest economy. So we've got Russia and China doing trade together. They're basically friends. And we've got the United States outside of it now as the third largest economy. So them teaming up can cause serious issue going forward. There's the BRICS summit. Their meeting just ended. We're about to hear more from them. So the IMF also just said the productivity is declining in most of the European Union. So with the bloc's economy is dropping and they're having serious issues. Their powerhouse is Germany. One of the larger facilities that is supposed to bring them out of this is now being threatened by Russia. So with all of this together, we are in a war economy. It's what's driving the Western world forward. Now, with this, I would also like to bring forward Israel just attacked Iran uh, earlier this morning, basically late overnight for the United States, but they spared the oil and nuclear facilities. And this is in probably markets too, which is correct because basically saving this energy sector. So, as I was saying earlier, watching oil for the volatility, it is because of this. So, since it was spared, ironically, I expect a bit of a drop in oil weakness since it appears that the supply is secured at least for now. So, with this, I would like to wish you all a great rest of your weekend. And until I see you again, my friends, stay free.